The thing is, what I observed in my with the people and myself in the past, that if you try to short an uptrend, is basically like trying to take a revenge on the market because you didn't. And this is the thing which people do who either FOMO'd out of the position too early or didn't take an opportunity when it was on the table, missed it, okay? It's like trying to take a revenge because then you think, okay, the market will reverse. It reversed here, it reversed here, and this time it will also reverse. The problem is here that really you want to be following like a certain way. If it's trending, you just want to follow a trend. So what you want to be thinking of is rather buying a dip than shorting, hedging, or any other stupid ideas you can find for doing with the price action in this situation. Especially this moment, it's like 20 pips already, 200 pips almost. Okay, so it's really powerful for today. And if you look at the 4-hour time frame, and if you get by the voodoo, well, it's beautiful range, and I was talking about it. So it is, those fibs are really easy to get any trade and manage, but it doesn't look bad. And on short term, it's in an uptrend. Here it's also like if you go with 4-hour with this one, it's also still an uptrend here. So you can't be really thinking of shorting this shit. So just making a rational decision about the bias and the side of the trades you want to be in is like will preserve you from a lot of pain. It won't preserve you from the pain of watching the price action running away from you.
That's the worst. Yeah.
Well, it's like Mark Douglas said in this video, and I really like took some notes, but he said basically something like this: it's better to enter a trade when you see the opportunity than just hesitating and not entering, because probably the pain you will encounter after knowing that the trade you were to take and you didn't take because you hesitated is going your way will be bigger than just potential loss from this trade. Okay, so it is like we spoke. It is like every trade is an adventure. It's kind of a state of mind when you have an idea in your mind coming from the TA and you have the certain methodology and you just want to test it and you have to accept the loss. So if you didn't take a trade, like, well, Katya, she's not here today, but she asked me like on USD JPY or something. I don't remember what was it, or NZD pairs. I don't really remember. NZD, USD, something like this. So it was going down, and she asked me, okay, what's about the trade, what to do, and I said it's just why is it so dumping, and I said it's just an imbalance of buyers and sellers, and there will be always a retracement. In this case, it actually blew the past the last resistance, and it's at the top of the range here, and it's pretty visible on this picture, yeah. So always, I mean, if you didn't take an opportunity here, you have to remember that market most of the time doesn't move and only in a straight line. It's not BTC. It's not something you will feel bad because you didn't buy so low and you didn't hold and you were not one of those moon guys. It's rather a trading state of mind when you just want to increase your portfolio over time by using the price movement. So price doesn't move in one direction forever. It will have a retracement, bigger or smaller depending on the trend strength, but still there will be retracement and re-entries. So in this case, I will be looking on even the higher time frames because it was powerful. So something like 4-hour or 1 hour, 21 EMA to get a nice confluence and time at the lower time frames. And there will be a consolidation at least after this movement. Or it can do something like it did here, okay? It's just happening. So imagine that you are already like in the past. Why is it? Replay. Why the replay button isn't working on me? Okay, I need to refresh probably. Do you have some issues with the trading view this
Yeah,
week?
sometimes I have to refresh. It's not fixed, huh?
Yeah, so I found it more frequent recently. Okay, now it is working. So see, this is the situation. There was a nice little uptrend here. I'll just remove all my drawings, it will be better. So it was a nice little uptrend here, and well, I didn't take a trade, okay, on this one. And it moved up and up, and well, you can feel some kind of a FOMO and feeling like a stupid because you saw the opportunity. It was blatant here. This is just straight in the face, okay? The entry with 21 EMA, but you may have not used the methodology like this. That's probably a decision like which can cause not entering here. But there was a second entry and the third really late using this technique. So the price is getting away from you, and you really don't have on the selected time frame really good entry here. Okay, so then you can really either try your luck here with, well, it's really wide stop loss here for this trade. What I want you to show that the price many times will do something like this. It will go more up, but then of course it will retrace. So we will be back sooner than later to the price where you will be able to probably buy the dip. So we are back here. We were back almost at the price you would be entering a trade on the long side. So those are retracements and those are confirmation trading. So if you're bullish on something, you want to just be buying the dips because they will confirm the uptrend. Okay, so you will have confirmed uptrend, then you have the retracement, and you can buy it back, and the price will be going up and down all the time. It's especially in Forex, it's a giant oscillator here. It will be just moving up and down. I don't think that we will have a, well, it can happen, okay? Like from here to here, there is a nice big downtrend on the GBP, which took like, it was 1 year, yeah, more than 1 year here, 1.5 actually, of price just dumping. But during this time, even on a daily, there were opportunities to join the party, and even if you didn't use it, you have still opportunities. Like even if you didn't trade this uptrend, the price went back to the previous to the previous possible entry, and there is a lot of opportunities in the market. It's basically like a shop with candies. It's like a candy store. You can go to any market and just seek for opportunities, and they will show. So even if you think, okay, that it left without me, you can think about the next day or the day afterwards, that sooner or later you will find your entry. But the most important here is what the price, when it leaves the consolidation and starts trending, what it means to you. It basically means that right now you have some kind of a short-term confirmation of an initiated trend, at least to another zone or whatever your methodology is here. But it is confirmed that it broke the current range here, okay? And because it broke, GBP/JPY broke the current range, my possible next trade, if I was trading it, would be somewhere near, I think I drew it a little too low. It is like, yeah, something like this. So it will be somewhere in this region to buy it on the retest after it confirms properly. So I would wait on the 4 hour to close and follow through above this resistance just to get a good confirmation of it. And the next area to watch, it will be, well, this resistance coming here. There is a reason why people stopped buying here and they started selling, okay? So like Mark Douglas says, this moment of time, basically there was nobody in the world who wanted to buy higher than it, okay? I just love him. It's just beautiful what he says. It's a lot of things you can guys learn from him. Trading is 100% based on the psychology. It's psychological skills, because it takes no knowledge to put a winning trade in the market. Literally, you don't need to have knowledge. You just need to have luck. You can just toss a coin. What I'm going on, long or short. Okay, so this is psychology and risk management skills. That's all. That's what is the hardest part of really understanding and letting it sink in, that no indicator in the world, none of the best strategy will help you to stop losing money. It will be only you executing the strategy. He also mentioned something we were talking about. So you have there is a difference between the output of a strategy and yourself using the strategy and yourself using your skills. That there can be two different results. You can find, like, if you put on a trading view there is a way you can, like, have a strategy and it will run backtested on the trading view if it's coded, and you can have brilliant results, but when you start applying it, you will find yourself in deep shit because something went wrong in this transition. And this is because, well, because of the emotions and all the stuff we are talking on the mentoring. Let's go back to BTC. It's a good example. Okay, so, well, we had a retracement. Now we are breaking the resistance. That's really nice. Okay, so people were bored. Okay, they didn't catch up the right nice little entry here. That's okay. They didn't even long here. That's okay. But what they are doing right now, I see people trying to short the uptrend. So whenever I see people in the Discord who try to short the uptrend, then I'm switching my bias radically to bullish. Okay, it's like I already have a confirmation from the participants of the market, because those are the people who missed the good juicy entry, and because they are tied to one asset and they FOMO a lot, and this is the only, the best asset to trade in the world, which is not, but this is the way of thinking. So they are thinking like it's a revenge type of trading, like taking a revenge of the market that it dared to leave without you, and they want to make money at any cost, just shorting those pullbacks. So let's say this guy who did short what was it, 260. Okay, so this was his short entry at the time. How much money you can make in the really strong, and this is the strong uptrend, when you short? Not much. Even it didn't reach even on hourly the 21 EMA. This is how strong this trend is so far. Okay, so it was like $100 versus, well, say your methodology allowed you to long this level. Let's go with the 260. So even if you longed, you would be like $500 up. So the trend, the uptrend is also giving you like, if you follow the trend, you will get more rewards for the correct behavior, and it gives more possibility. So this is the first stage, and then people start getting euphoric, and they will be just, longing any place. Soon, or even now, you will see. I mean, you can even now, if you go to the Discord channel, the general one, or even the program, there is like increased activity of people. Everybody is euphoric, laughing, LMFAO or whatever, however you call it, and joking around, and wow, it's all good bodies, etc. Okay, so people start getting euphoric because the asset started moving, the only asset they trade. Okay, and they're getting euphoric, and when you get euphoric, you also lose the perception of the reality. You're getting overly excited over things, and this is why people call me grumpy sometimes, because I try not to get overexcited over many things, or even get a second thought. So if somebody is bullish, I will try automatically to provide the bearish scenario for it to get it evened out, because to make money in the market, you have to do, which is totally the hardest thing as being a human being, rational, and being here and now, not getting euphoric, not getting sad or betrayed by the market because it left without you, just observing the price action, because this is what you see in front of your eyes. It's only an information with no emotional bias. It's just an information about what the people are doing in the market in a graphic way. And your task is really to take an advantage out of it. and you have to take this information, process it in your computer, your brain, with certain methodology, which is technical analysis and your strategy, and see, okay, I'm in the uptrend. Soon, probably, well, on daily, if I have a daily close above it, I wouldn't even wait too long for a confirmation, but I still would love to have a confirmation above this resistance here. But basically, if it closes like this, we'll have another higher high in the uptrend since here, okay? So, well, what it means to you as a trader, look back in time. Okay, we had similar situation here, and then we spent no more than 1 month just consolidating, then dumping, and then trying to get back to this level. Okay, so 2 months of the price action. So you still have time, and time is acting on your behalf. You just need to sit and watch the price action. So answering to your question, Stan, how to get back into it, just sit and watch. And if you want to play with minimal amount just to get connected again with the market, with the strategy, with whatever you do to make money. And you have time. Nobody is forcing you to enter here or here. Nobody. Nobody is forcing you to short or long. It's only your mind telling you, well, it can be a good or bad idea. So it's a skill when you can select a good and bad idea. You can defer them, not because it looks nice, so you're not getting intuitive about it, but because you have a certain methodology telling you to do so. So if the market starts trending, my methodology applied to the market will tell just long the 21 fucking EMA and manage with it with 55 or my indicators. And this is what I know, and this is what I have to apply. Sometimes it won't provide to big profits. Sometimes it won't give me a nice entry. Sometimes it will kick me back. But over time, I know that this is the best strategy I can use for such rapid movements.